Let's bring on board Sanjay Sinha of Citrus Advisors to talk about the Indian equity markets, to talk about the fall that we are once again witnessing, and many more events that have transpired. Sanjay, thank you for joining us. It's interesting to note that we are finally seeing a bit of a positive move on, the broader markets, the mid caps and the small caps. And yet again, many people are talking about whether maybe these broader markets have bottomed out. Mid and small caps rising. Is there something much that you'd read into it, Sanjay?
So two things to say here. One is that, if you go back and see as to what was the peak of the small cap, the mid cap, and the Nifty in 2018, early part of 2018. From that level, the Nifty did correct and was able to reclaim that level and managed to cross that level also. But if you look at the performance of the mid cap and the small cap index, the small cap index is roughly down almost 40 to 45% from the peak of 2018. The mid cap index is down approximately about 25% from that peak. And they have been in this situation now for 20 months. So in these 20 months, I think significant amount of price correction, significant amount of time correction has already happened. I think the ground is now set because 6 quarters have passed. These companies have not been sitting idle. There has been some growth in the EPS of many of these good quality mid cap and small cap companies. So the ground actually has been now made ready for a rally if I don't call it a rally, even if I call it a recovery in the small and mid cap segment, I think that is very much on the card. The second thing, which was I think keeping the sentiments low in India, was the relentless selling that we saw from the foreign portfolio investors right through the months of July and August, when they've sold in excess of about 30,000 crores. That intensity of selling has come down in the month of September. On a couple of days, it has been net positive. So sentiment wise also, it has perked up a lot of sentiments on the street. This event that has happened in Saudi Arabia, no doubt, is causing some concern. But I think this thankfully is confined to just one commodity class and is not likely to flare up into a pervasive thing affecting other commodities. So one can keep a little, I would say, an optimistic outlook that once this cloud clears off, literally and figuratively also, we will see much better days for the Indian broader market, and more particularly for the small cap and the mid cap segment of the market.
All right. So it would not be unreal to assume that, yes, there could be a recovery that will continue in the mid and the small caps, according to Sanjay Sinha. But Sanjay, the eternal question, of course, is that this slowdown that we are in the midst of, right from biscuit to cars that we have been witnessing, whether it is cyclical in nature or structurally, the Indian economy is slowing down. I think that's the key debate. So which school of thought are you in? How much is cyclical, and to what extent do you believe that no, we really need some structural reforms to come in from the government to cure us from this slowdown fear?
Okay, so my point of view there is a little sectoral in nature. This slowdown that we have seen, I think, is not across the board slowdown for consumption as a theme. We have heard the commentaries from almost every corporate in the last quarterly result. They seem to be disappointed with the fact that while the urban consumption had more or less plateaued, the rural consumption was growing at a fairly fast pace. Rural consumption's growth is now not on the same pace as what it was historically, and I think that is where much of the root of the problem is coming. Therefore, I think the pragmatic way to look at things would be to moderate your expectations in terms of the overall growth in consumption. Mind you, consumption in India is not going down. The rate of growth of consumption that we had seen historically, that rate seems to be now a little slower. So that is point number one. Point number two, and therefore, an extension of that logic would be that, things which are of the nature of a fast-moving consumer goods, such as, biscuits and other consumer food items, I don't think, that is something that is going to be structurally affected at all. Once the monsoon numbers are before us, and the way the Kharif sowing has happened, and the Rabi sowing is also likely to be very good, I think the rural consumption is likely to be on track. However, as far as the auto sector is concerned, I think in the case of auto, the view has got muddled up because there are a lot of things which are happening together. One, the cost of autos have gone up thanks to price hikes by the manufacturers because of commodity price hikes, because of insurance and so on and so forth. Second is the confusion that has been created because of BS6, the confusion that has been created because of the government support for EVs. So I think till the time that you have a little clarity on these issues, auto might continue to be lackluster, but as far as the other consumption goods are concerned, I don't think we have much to be worried about. And to support my argument, I will also quote two other evidences. One is, if you've seen the numbers from the listed retail companies in the first quarter of FY20, all three of them have reported very good numbers. And secondly, if you look at the sales of the consumer durable companies, that also has been strong. So where is the consumption story that has gone bad? I don't think that has happened as yet.
Okay, all right. Fair enough. Now, since you're talking sectors, let's just talk a bit more on sectors. You mentioned that you do continue to like financials. Now, when you say financials, you say NBFC, and the first name that strikes is liquidity crisis, which very soon may turn to a solvency crisis as well for some NBFCs, credit growth problems, and then you also do have this entire transmission bit, which many fear will hurt the profitability of financials. So what exactly is it in the financial space that's making you optimistic? And is there any separate pockets? I mean, between PSBs, private banks, HFCs, NBFCs, any specific pocket that you like?
So therefore, in my opinion, the safe haven within the financial sector in today's context are the play on the insurance and the asset management companies. They have been relatively untouched by whatever is happening on the credit side of the market. So they will surely be one of the subsectors within finance, which I think one can continue to be very positive on. The other subsector, which I think should be able to hold reasonably well, should be the private sector banks. And within the private sector banks, the corporate facing banks, in my opinion, will also be in fairly good stead, given the fact that they have underperformed significantly in the past and now things are going in their favor. The third segment, which is the PSU banks, things would have been all right if we did not have this confusion created because of the mergers of the PSU banks, and that has of course created some confusion. So till the time that is out of our way, I would say that one can be a little cautious. Coming back to NBFCs, while a lot of steps have been taken by the government to bolster the I would say the fundamentals of the NBFCs and more particularly the housing finance companies, I think affordable housing as a segment within the government is going to be will remain the focus till 2024, when the government is committed to provide housing for all. Given that background, while we will have pockets of pain within the HFCs, there will be a larger play that you will get from HFCs once we have this liquidity and the solvency issue on the side. So overall, if you are going to play on the Indian equity market, and that is going to be a top-down story linked to the Indian economy picking up pace, finance will have to be a centerpiece of your investment philosophy.
Sanjay, for the last 3 to 4 odd weeks, it's been a Friday game where we do have FM Nirmala Sitharaman announcing some steps to sort of perk market sentiment. That's a different thing, of course, that her efforts are being negated by something that happened globally, maybe a Trump tweet or a drone attack here and there. But yeah, there are efforts being made. However, again, some on the street do believe that these efforts are not only coming in too late, but they're also too little. And now, of course, you do have this Saudi attack. So that will amp up our import bill as well. So our fiscal situation is not that great. Divestment is, of course, being pushed, but we still haven't heard any big ticket divestment. Do you think that the government at this point of time has limited ammo to unleash to perk up market sentiment, and hence you are seeing these bit by bit steps by the government?
So in terms of ammunition that the government has, I think the government has ample ammunition. I think what they need to do is set their priorities right. In a situation where the GDP growth rate is under question, I think the last thing you should be doing should be to look at your fiscal deficit target as the one to be protected. Because, mind you, if the GDP growth rate is going to go down, your tax collection is going to go down anyway. So where will you therefore, will you then start cutting government expenses? If you start doing that, then it becomes a vicious cycle which will take you spiraling down. I think this is a time in which the government can possibly do two things, and I think these are fairly strong ammunitions in the hands of the government. One is that, for maybe a year or so, they need to bite the bullet and relax the fiscal deficit target and go on the front foot in terms of spending. Once that gets into motion, the virtuous cycle will kickstart everything on the positive side, which will include a better economic activity and therefore better tax collection, and hopefully a fiscal deficit target which will be a more reasonable one. The other thing that the government needs to do is, this shadow disinvestment process,
right,
by taking money from one PSU and putting it into the government. I think that they need to get out of, and they need to get down into real privatization. So I heard the talks about some companies being privatized.
Sanjay,
I think the government needs to privatize.
Okay, Sanjay, we're out of time, so I have to just interrupt you there. Thanks so much. Well, yeah, like you mentioned, we don't want that HPCL, ONGC kind of a situation. You want a true privatization essentially to take place. Point taken. Thanks a lot, Sanjay, for that.